Good morning, everyone, and Happy New Year. Trust it'll be a happy, healthy, and prosperous 2026. Now that the pleasantries are out of the way, let's get to business. So let me share my screen. And here we are. And what a difference a day or so makes, huh? So I'll do a little quick recap of Wednesday and kind of where we are. I'm also going to talk a little bit about some of the newer offerings we have, or not really new offerings, new features I'm adding that we're going to be adding. Julie and I, Bad Hombre, are going to be talking about some kind of joint course with E-mini and SPX. I'm also going to have some gamma coaching and training. We're going to do a few things. I'm also adding some features. I did an experimental one. I threw it out over the weekend, or not the weekend, over New Year's Day, and I'll kind of show that here, incorporating a little TA and a little trade structure based on the gamma levels. This is experimental, so don't crucify me. Anyway, well, you can crucify me if you want. But anyway, so that's where we are. And so let's talk about Wednesday real quick. And let me switch to a non-continuous chart. And let's talk about it. Let me get these levels. Actually, we can leave them on. Okay, so as some of you may remember, Wednesday we've been kind of trending down for a few days since the all-time high last week. This week we had red day after red day after red day. So we closed at 45 all-time high on, I guess it was Thursday. Friday we ended up here at 69.30-ish. Monday we opened at 69.20, and then it's been lower and lower each day. And the gap fill gang, I don't know if they're satisfied or not. I don't worship at that church, or maybe at that church, but not in that pew. And so I don't know if this counts as a gap fill because it didn't go all the way down to over here. It just kind of went down to 45. So it depends on how you draw your lines. If you use a crayon or a fine tooth, a fine marker. But we did break this part of the gap, 68.60 or 70-ish. So we can use that as a reference point that we have to kind of stay over there if we're going to do a little TA. So let's talk about Wednesday. I keep calling it Friday, weekendy. Let's talk about what happened. So we opened at 69.20. We kind of hovered near 6,900. We had some kind of numbers, I forgot, Chicago, PMI, or whatever it was. And the market got excited for a minute. We kind of tried to bounce up, and we failed. And we were kind of hovering in this area, the 6,900-ish. And then once that broke, we started trending down. Now, there was some market maker negative gamma attraction accelerant down near that gap fill area that seemed like a bridge too far when we were, 50 points away. We had realized volatility exceed implied volatility, and we closed at the low of the day. But I want to talk about the JP Morgan collar for a minute, the roll. So the JP Morgan collar roll hit around 2-ish. No, yeah, like 3 minutes before 2, 1:57, but who's counting? And we got what we typically see, a little bit of a spike up And I had a little discussion with Paul Duncan of Gamma Edge and Vol Sigs, and I kind of misspoke the way I described the dynamic, so I apologize for that. So after that initial spike, the negative gamma of of the trade, the negative delta, just kind of pushed us down. We didn't really have anything to keep us elevated. And then what happened, which I did say in my note, was regardless of what happens here, that last 10, 15 minutes of the day, the downward move tends to accelerate, and that's what happened. And we just kind of closed right above 45, right above 45. And I'm not going to bother pulling up the old charts. Maybe we had customers sold, I don't know, about 6,000 put spreads right there at 45. God bless them, diamond hands. They held it, and we stopped right there the way Gamma says we had to. Which might have been scary if you were holding on to something like that, but trust the data. With trust but verify. Trust but verify the data. Okay, so now that we're in the rear view mirror, let's get to where we are now. So this 85 area was a prior low from earlier in the week or from last week. And so here we are kind of looking at that area. And we have friction here at 75. I'll show you why. Here was the bottom of the expected move when I checked earlier. So 68.55. We have about 25, 30 point expected move. So the options market is projecting down. And I tend to round down. I tend to give it a little wider berth. So near the 55, 60 round number-ish, a little bit above it, kind of in that gap, not filling it, but in that gap. And on top, we have 69.15-ish, 10.15. So that's kind of the range that the option market is pricing into today. Of course, we have the round number pivot. It's always important, 75. It's also a round number that just tends to be action at these numbers. Okay, let's go to the gamma map. I'm going to show you a few different things. So here's why that 75 is so important. This is where market makers are short gamma, customer long. And customer long market maker short. Ladder, potential accelerant. If we start going up, people start buying, whatever, I don't care why. If high frequency traders come in and buy futures, or we often see like 1 in 2,000 contract lots come in the beginning of the day by institutions. 85, 90 is kind of where we topped out in the overnight session, kind of where Gamma would expect us to have topped out. Also, if you kind of look at the pattern, it's also up there. So there's confluence, everything kind of overlaps over there. And so we have this potential ladder up and kind of stalling out 6,900, 05, 10. But there is something all the way up at 69.15. Probably don't get there, but we can. And then upside starts to get capped up here over 25, 40. There's a lot of sold options when it's to the right. That's where market makers are long. And so as we head up, they sell. As we head down, all things being equal, they would buy to kind of neutralize it. So here would be one natural inflection point. Here would be another natural inflection point in here, wide and whippy. And here's the zone where we closed on Friday, on Wednesday. I keep saying calling it Friday. the 50, 45, 40 area. And for you gap fill purists, we have something at 68.30, just below the gap fill that's sold, that should be supportive. So we got that there. Is that non-zero DTE only? No, this is zero DTE. This is zero DTE. This is today. Let me make sure. It'd suck if I, no, that's zero DTE. Yeah, that's zero DTE. It would suck if I did my whole thing with the wrong DTE, wouldn't it? I did that once. So yeah, no, this is zero DTE. Yeah, it could be different from spot gamma. That, you know. And so here we are. Now, if I widen it out a little bit, and this might be what you're seeing, let me widen it out to 67, 60 on the bottom. And let's just make it 75 on top. You might see, so this might be what's changing the way you're seeing the picture. We have Happy New Year, Curtis. We have 14,000 puts sold here at 67.75 by the fund that we affectionately call them, I serve with 100 wide gang, because they sell 100 wide iron condors, collecting the proverbial pennies in front of the steamroller. But you know what? They're squeaking out 0.5% a week, 1% a week, and pretty soon, you know, they squeaked out 20, 30, 40% in a year. That's not so bad, better than a bond. And once or twice I've seen them have to roll and adjust. I haven't done the math on how much they win or lose, but they're still here and they keep doing it. So with the utmost humility, I'm going to pretend that they know what they're doing, because they probably do. So anyway, so here they are, and so they're going to stay there. So this whole area from 30 to 75 is going to be supportive by virtue of this. Ivan, my brother, good to see you, bro. Good to see you. If you have any insights that you want to throw into the chat or whatever, let me know. Always appreciate it. Ivan knows what he's doing. He's a smart guy, good trader. We traded shoulder to shoulder for a while. And similarly on top, the 6940s are sold. So that's a cap. That's a bridge too far, really, anyway. And then, yeah, anyway, so that's where we are. Let's take a quick look over here, and then I'm going to kind of switch back. So here's kind of what we're looking at. The six, so you see the red here? That's where the market makers are short, customers are long. So that's kind of where the accelerant flow would be taking us should we get moving. Down below is broadly supportive, you know, because of this. Now remember, gamma is stronger, for lack of a better word, as we head toward a strike and as we time to expiration and gets less. So this area down here is somewhat affected by what's at that 67.75. They would have to start buying, you know, down here. And plus, I showed you that there's, you know, this kind of positive gamma area as well. So this whole area is kind of supportive. Okay, let me switch gears for a minute. Let's go to over here. And so here's my little note. When I wrote it, we were up about, let's make it even larger so folks can see. When I wrote it, let's make it even larger. What the hell, right? They don't charge me extra to make it bigger. So we were up about 40 points. So Wednesdays don't read more like positioning than panic. The JP Morgan roll, whatever. And I wrote something on yesterday during the day when I looked at the volatility a little bit more. I'll circle back to that in a minute. That also seemed to imply, just broadly speaking, if you looked out on the curve, there was nothing that indicated any kind of panic, any kind of buying tails and wings or anything like that. It looked purely like a one-day kind of phenomenon. Earnings and events for today, nothing. Whatever, manufacturing PMI algos might get excited. You never know. So here's my chart. So here's Wednesday. We were roughly in this area. Week to date, Wednesday's low to 69.20, and the 5-day low, again, the low was 68.45 on Wednesday. I keep calling it Friday, and the high was the all-time high. And here's the expected move rails, et cetera, et cetera. And here's some clustering. Oh, and we have an E-mini version. I also do E-mini. A lot of E-mini traders use this too, so I guess kind of included it in the plan so that people can see that it's there. And then here's the paywall. Whoops, but so here's where you get the chop zone and like how to trade it. I wanted to show you this. So here's what we're looking at. We have this spot here, 68.75. I made that kind of like the visual reference point. And this comes in the daily plan for subscribers. It's there. New feature I added a couple of weeks ago. Once I figured out how to draw boxes with the snipping tool. That's when I added it. So we have this whole box here that's kind of, I wouldn't call it supportive, but there's action here. This could resolve to over here to 50. We could stay in the 75 to whatever 650 zone and kind of resolve in here. Here's the bridge too far zone. Should the low from Wednesday break outside the expected move, we end up here. Here's the ladder up potential ladder up. And then over that 69.15, over that area, we have this kind of mixed zone with 69.10 looking like the possible target. And then we have this bridge too far zone. You can maybe buy a cheapy fly here for 15 cents and see what happens. Okay, switching gears. Let me see what this is. Okay, this is the update of the one that I did yesterday, but I want to go to this one because I did a little bit more. This was free. I put it on Twitter. I put it on Substack. I put it on WHOP. Preliminary draft. Was going to update it, and I did. Okay. So overnight futures dipped to 68.30. Okay, just shy of the gap fill. Fine. I want to show you the volatility structure. The volatility structure, when we look at what happened here, so VIX popped to almost 15, big whoop. The distance between from 15 to 1650, the January futures, which is what this is broadly priced off of the options, is 1.5 points. It's standard. A little bit of a pop in VVIX, but again, nothing crazy. The VIX 9-day kind of stayed within its range. VIX under 95, no vol stress. Now the sticky strike stuff. Okay. You go to the CBOE, the VIX decomposition index, they have it here. This came out in August. There's PDF you could get from them. You can download it over here if you're into the wonky stuff. And it shows you of the move in VIX, of the 4.3%, what shifted, what moved. And basically, the move was at the sticky strike. Call it at the money. Call it the fixed strike vol, kind of, sort of. Downside convexity minus 0.02. No crash demand. Upside calls being sold a little bit too. Skew, a little bit of hedge demand, nothing crazy. This is the hedge mechanical move, dealer flow dominated, volatility is lifting around the at the money zone. There's no tail stress. Okay, so that was yesterday before the market opened, kind of told us it was a nothing burger or not a big stress event like it looked like. So here's the gamma zones, expected move. Here's my little gap fill area. Here's the bigger thing I showed you. See, there's a gap fill. Oh my God, we don't like the gap fill. We don't like that. Technical pattern. I'm throwing in a little bit of amateur TA, rising wedge breakdown from that area, broke down to that 68.45, failed breakout retest. That was the way it looked before. But if we look at the way it looks now, here's where I update. See, I'm messing around with this idea for 2026. Okay. Now, if we look at the structure now, I hope I'm not boring you guys. Inverse head and shoulder starting to form at that 68.80. Suddenly, of course, the great thing about TA is you can adjust your time frame and you can adjust your lines to make any picture you want. Maybe I'll show you something later. So tactical zone is right here. That's 68.85. We have the stacked calls, potential magnet down here if we go. And anyway, so I also am throwing in some scenarios, how you could play flies and how you could play where you would play iron condors, wings outside the expected move and outside the main gamma zones. And this will be in, this I sent out today as a freebie, but this will be included in the subscription thing. Just kind of featuring some of the stuff I got going on. Yeah, okay, so that's that. What I'm gonna do now is I'm gonna shut up and turn the screen over to Bad Hombre, aka Chewy, or Chewy, aka Bad Hombre, I suppose it is.
Good morning, everybody. Hope you had a good New Year. I took a good break, about an 8-day break, but I'm glad to be back. First thing that I'm watching here is this level at 69.26. It's kind of my floor for today. If we can't hold this, I am pretty bearish for today, seeing how much we can fall. On ES, this is ES, keep in mind, but I'd probably expect to see 69.05 on ES. The first level that we come into would be 69.22, 69.20, right in this little area here. Could expect a little bit of a, call it 5-10 point bounce, but I think it will be short-lived, and then we'll continue to the downside. That's if we can't hold my first floor level of 69.26. I don't think it will be that straightforward. I'd personally like to see a push up into open, hit my ceiling at 69.36 or 69.32, kind of have a sticky level there, and then for a rejection for that 6,900 level.
What level are you seeing the top at?
I'll say my ceiling is like 69.35.
And that's what Gamma tells us we're going to stall too. If you look at my chart, let me just throw it up there for fun. So that, and what I want to highlight for people is, okay, so we have the pattern recognition, and then we have the extra confluence or the extra confidence. Oh, wait, gamma tells us that that should happen there too. So that's how we like to use them in conjunction.
Right. You want to see context to your lines. That's the way I like to see it. As you said, you can kind of draw your lines however you want to give you a specific narrative, but that doesn't mean the narrative's right, and that's kind of where the gamma level comes in. But that's a pretty simple game plan. I'm not expecting anything too crazy until Monday. Maybe even Tuesday. I think people are going to take Friday off for the most part, so I wouldn't try to be a hero today at all.
Okay, thanks. And let me get back to SPX. Okay, so here we are at 80. So we're holding above that 75 area, which is important. Just to remind you, let me get rid of this because this screws the eye up. It's hard to see the proportionality with this big thing down here. Like Paul Duncan from Gamma Edge, one of my former mentors, likes to say, and I have no problem saying that there's people that have helped me along the way, and I hope to help people along the way too. 69, well, let's make it 55 just for fun. 75 is important. Now, let me just point out from a storm point of view, the way this decays over the day, just pretending everything stays static. If we're not over, say, this 90 area or the 75 area, let's say we get up here and start stalling out near 75, then whatever hedges the market makers bought, then they have to start selling. So market makers short, customer long from above, if we're below it, pushes us down. It decays. These options go from a 50 delta to a 40 to a 30 to a 0. And often that'll happen at the end of the day, wherever we are. That's where we get those quick whooshes. So if we're not over here, this could decay down, pushing us probably toward this area here, just on the decay factor. And it's way early to look at charm, but just for fun, let's look at it. And so this is potentially, at the end of the day, if this is still here and we're under it, then this pushes us down and we get caught somewhere in here. If we're over it, then we end up somewhere stuck in here. That's assuming everybody plays the hands that they have, that they don't have to deal for 2 new cards, as if everybody plays these cards. Like the Iron Condor Whale plays the cards that he dealt himself to the bitter end. Okay. Played, past tense. Okay, so that's where we are. Wow, I'm doing good. It's 9 o'clock and I'm almost done. I'm impressed with myself. Okay, so I started playing around with some stuff. Let's forget these other trades I have in, because and some people have asked me, do we do other trades other than SPX? Yeah, I do some myself. I don't have time to curate and be on top of all of that. But just to give you a brief look, a quick little sneak peek in here. We call it all trades, alternate syndrome symbols. And we have these kind of setups, scalps here. Look at the option price, how it went flying. JD does a lot of that stuff. Nike trade that members could have taken. Here's the option structure. If you don't mind the 600% return, conservative or what the hell. There's the structure. Now we have Dan. Some of you know Dan from Mentor Q. He's been a buddy of mine for a while now. He puts in different trades based on, he does a lot of volatility modeling. Here I had an Intel call sweep I threw in there. Let me show you some more of Dan's trades. So he kind of analyzes at the money vol and the Z scores and all that. So there's, I think, something for everybody. I don't know. Depends on your taste, but I think so. Gold, silver, all that kind of stuff. So anyway, that's also what we have. I just don't feature it like in my promo propaganda stuff, but it's there. Maybe I'll start featuring it. I did in the beginning, but then it just kind of became a little too much to try to post everything, and then you'd have like a 50-page email every day, and you're not going to read it anyway. So there's that. Yeah, JD crushed Nike. Absolutely. He's been a great addition to the team. I know him from back in the old Mentor Q days. I used to be a moderator there. Beta before they launched. And so, I accumulate people over the years. And so he's one of the people that, that I respect his work. Okay, and so here we are. There's really not much to talk about there again. So let's take a look at what I modeled out here. Let's just stay with SPX to keep it simple. What's this here? Okay, this is an iron condor based on the levels I saw before. There's really not that much juice over here at the 30, but there might be. So here's the puts. Oh, it's the puts. The puts, I was trying to get 60 cents, only 42 cents. So it's selling the 68.15. Could sell the 68.30 if you want to be more aggressive. And here's the calls, the same thing. So this is kind of what I call a wish trade. I would also do similar order. I'll do a 1-in-1 for what the market's giving me on each side too. Where's the put one? What happened to the put trade? Here it is. Similar. I'll do a 1-on-1 for 90 cents. And here's a downside fly protection-y kind of thing, or if we get a wiggle to the downside. And this was in the note. So what's the downside fly I'm looking at? 55, 35, 20, selling that gap fill area. And these things are pretty forgiving. So if we don't get that wiggle down, whatever, I just close it out, or I make it asymmetrical and sell an extra 35 or sell something in there, and I don't worry about it. Call fly, well, here I did a 15 wide. A lot of times I don't normally do 15. I think this thing will pay. If I wanted to do it my usual style, above 45 is not bad either. Something like this, and selling up here. So I'm going to put in the flies. I'm going to put in the iron condor trade as one trade for 60, and I have each of the individual legs in. I'm putting it in. I'm just trying to show you how I use this to think of trades. You could skin this cat a lot of different ways. I don't want to be a signal service, as they call it, like follow my trades blindly. I'm trying to teach you how to fish, not feed you a fish. was if I teach you how to fish, you'll eat forever. If I feed you a fish, you're going to be hungry tomorrow. And that's it. Any questions, comments, concerns, criticisms, whatever? And yeah, like I mentioned, let me just get rid of this for a second. I want to do something here. Where is it? Give me 1 second here. I'm not great at finding things. Okay. There you go. Whoops. Okay. And so coming this year, I'll probably launch this next week, a Vic's Alfred's course. Just a little brief module that my paid subscribers will get, and I'll probably release it on YouTube at some point. You know, so I'm kind of teasing that, so to speak, right here. I also have a gamma thing. You know, here's like all the courses that I have in the works. Gamma exposure, where is it? I have it here somewhere. Whatever, I'll have to find. I'm not great at finding shit in my downloads. All my downloads are in one long thing with no folders. I can't find folders. I'm lucky I can find it at all. I'm lucky I can find my download folder. Tell you the truth. So anyway, that's that. There'll be some coaching coming up, some more YouTube videos, some free, quote unquote, some for subscribers. I'm going to have the subscriber only webinar this Wednesday night where we're going to be doing that. And so a lot of exciting stuff for 2026 planned. Now we know about the best laid plans of mice and men, but that's the plan. That's the plan. So anyway, that's where we are. And with that, take care, everybody. Please like, retweet, restack, reshare, YouTube, comment, all that kind of good stuff would be appreciated. That just helps me to be able to kind of keep doing this. And if it's helpful to you, it's probably going to be helpful to somebody else. And it's going to help reach a wider audience of people that might benefit from this, because really that's what I want. Okay. Take care, everybody, and trade safe, and have a happy new year and a great weekend.